Yo, shake my hand, shake my hand. Welcome to 365. Guys, a very short video. We've pushed out a lot of good content this week. I think we've done 2 weekly, type analysis. Our traders war room, 29 and number 30, right? So just check them out on the channel. I'm gonna, you put an information card. Just right click the link right now up here on your screen and open it on a new tab, right? And finish this video. This is gonna be like 10 minutes, or if not shorter. I just want to give you a rundown of what Jerome Powell said yesterday, right? So we know yesterday there was a big FOMC meeting. We understand that there was going to be a statement. He gave a statement, and then there was a press conference. And I want to explain this kind of stuff because my thinking is the more content like this that I push out, in the next 4 to 6 weeks, right, if we keep analyzing the so-called fundamental data, analyzing these tones, sentiment, dovish, hawkish, how it plays in price structure, right? And you keep watching this type of content, very soon you'll also be very much empowered into understanding the stuff for yourself. So last night, just a few very quick important notes. Number 1, Powell was extremely dovish, right? So in 16 June, if you remember, he was hawkish. We're increasing interest rates. We're doing it very quickly. The interest rates might even happen earlier than expected. He was hawkish. So if you go back to the charts, if you go to your DXY chart, right, on the 16th of June, the dollar ran, just went wild. Last night, he was the opposite. He was dovish, right? So if you're watching the charts today, or whenever you check this video, you will notice that there's been a serious volatility and strong push to the downside. Now, I'm a supply and demand trader. I believe price is everything, and I believe price is in everything, right? The markets have a tendency to price in the future. And so because of that, we have been bearish on the dollar for weeks, right? So for about 2 to 3 weeks, long before yesterday's announcement, right? And there's a reason for that, but that's not what this video is about. So the things to take away was, number 1, he was extremely dovish. I mean, he said things like, so this is how you know he's dovish. No serious projections, all right? Or rather, there wasn't even a specific, I kept telling you guys that when you listen to the press statement, you listen to him talk, find out if he's going to talk about key specific days or moments when tempering will start, all right? Because that's a key indicator for a hawkish push in the markets. And there was none of that. There was no serious projections, right? It felt like rather he kept insinuating that it's going to happen, but much later, right? So there's no specifics at the moment, right? And he pinpointed, he spent most of his time, if you really watch that speech carefully, he just kept pinpointing on areas that need improvement. This is the FOMC not saying, okay, well done, American economy, you're doing extremely well. He does acknowledge that there is economic recovery. He does acknowledge that there's economic growth, but he pinpoints on the areas that they're struggling with, right? He spoke a lot about the labor market, which I'll get into, but it felt to me, when I rewatched that 1 hour, it felt like he was looking for a reason to reduce the stimulus, right? Which is a big contributor to the bigger themes. The stimulus package is quantitative easing. They print money, give people, because of COVID, jobless claims going up, etc., etc. That has its own chain reaction to things like inflation, hyperinflation. Is inflation transitory, right? So when they say inflation is transitory, they mean we will experience high inflation, but it's transitory. It's going to pass. But if he starts to worry about inflation, if he breaks rank from inflation might not just be, transitory, then we can start to start to see the worry, and you can see markets reacting to that. And yesterday, he actually said inflation was surprising. So there is that sense of, okay, is it still going to be transitory? Is it not going to be transitory? But he spoke about how it was a little bit surprising. The other thing that he said, literally within the first 5 minutes of his statement, was no moves will be made or have been made on asset purchases. So they're keeping that as is, right? So tempering again on hold. And then he said the most important thing he said was, while the economy grows, while this recovery that is slow but maybe steady continues to happen, the central bank has ways to go before adjusting its policy. That's like a direct quote, literally from the top of my head. He literally said that the central bank has, he didn't say long ways or short ways, but he said it has ways, right? So before they can adjust central bank policy, they're going to monitor economy for a while. Remember, tapering is policy. Right? So before we can introduce tapering, which would be hawkish, which would send the dollar to the moon, we actually have to first see some key, key economic indicators, etc. So for me, that already put me at a pause again. The tapering's at a pause. And if you watch my war room video from last night, I showed you my spreadsheet where I already lined up all my, the probabilities of what was going to happen, leaving rates unchanged. The probability of tapering and the fact that I was quite neutral on that, and there it is. So basically, there is ways to go before any type of economic policy is done. And then I'm trying to remember now, what else? Today's Thursday, right? So tomorrow there is the last final piece to the puzzle, which I want to talk to you guys about at the end. The Core PCE Price Index, right? I want to talk to you guys to that towards the end. But then he said, the last thing that he said, which I think was important fundamentally, was the fact that he wants to see strong job numbers. Now, strong job numbers. Next week, Friday, is the first Friday of August, the first Friday of the month. That's NFP. The FOMC, the Fed, the actual Fed is saying, we actually want to see those NFP results. I want to see strong job numbers, right? And that's happening next week. So if you're a good trader, you've got a trading plan, you've got a notebook, write that down. That next week, we can already start to anticipate what markets are going to be pricing in for the next trading week into and during and after NFP results are out. Remember, strong job numbers get the Fed closer to tapering. All right? Strong job numbers get the Fed closer to tapering. In the same sense, the equation to always work with is strong job numbers means weak equities. So if NFP is positive and the dollar is strong, equities have to fall. Now there are many reasons for that. Number one, from a multi-billion-dollar investor, I want to put money in places where I can rip the most. And if the dollar is the thing that is doing the most rally, getting the best out of it, I'll pull out of tech stocks and dump it in the dollar, right? That safe haven approach, etc., etc. But that the current equation, right, to stick with is strong job numbers is weak equities. So on NFP, watch the data results at 2 p.m. at least South African time. Was it 2:30 p.m. Sorry, South African time. But don't get tricked. Remember the previous NFP? We had strong job numbers, but unemployment went up. So that was negative. Right? Terribly negative for the dollar. And so in the same breath, we might have a similar situation or a better outcome. Strong job numbers means strong job numbers, they meet their expectation, unemployment drops, all right? Then you're going to get a strong dollar rally. In the meantime, the dollar is falling, and we've been talking about this for weeks. Now, we're literally about to make contact in a daily demand, and I still have not yet decided to buy. Now, from a mechanical rule-based approach, that's a potential clean buy. But when I talk about multiple time frame analysis, confluence, etc., sellers are in control, right? Sellers are in control for the most part, right? So I'm going to be watching if this demand gets taken out. And the real thing to look out for is tomorrow's final event, Friday. So tomorrow is Friday the 30th. I'm just checking the economic calendar here. There's going to be the Core PCE Price Index at about 2:30 p.m. South African time. Now, it seems like the forecast here is 0.6%. The previous results were 0.5, and now they're hoping to go up a point, basically 0.6%. Now, if we meet this, if we go 0.7, 0.8, 0.9, right, and the forecast is fundamentally actually greater, if the actual is greater than the forecast, and then we're going to see this demand that price is in now in the dollar index, right? And when I come to DXY, it's a shortcut to understanding what all the other dollar pairs are going to do, right? So if tomorrow this is greater than, right, the buys that are going to be happening from now up until the close of the London session, New York session, during the Asian session, these buys are going to rally like crazy. That means tomorrow we might actually see some short-term dollar bull run, right? But that is if the core PCE price index is actually greater than the current focus. And that's because this is a key piece to the puzzle for the Fed. When we're talking inflation, this is what they're looking for, because this particular indicator, right? So let's call it an economic indicator, right? A fundamental economic indicator really looks at the goods and services targeted by consumers, right? So it's like a price-weighted index. So it's an incredible, key feature. So I think that's it. Look out for this tomorrow if you watch this video on time. If you don't watch this video on time, after the event, this is a learning lesson, because it's going to happen next month, and the month after that, and the month after that. And in trading, your success is based on a couple of things: rule-based approach, an actual strategy that works, a whole lot of discipline, and a lot of back testing. And that's the back testing I'm talking about right now. So if you watch it even after, watch it before and after, see how markets reacted, right? So DXY is sitting at a demand. We've had a lot of weakness across a lot of dollar pairs, right? They might start to see some relief, okay? And the rally might be in preparation for the core PCE price index. Now, as a dollar bear, which I am, I'm generally a dollar bear. I have been, since the beginning of COVID in 2020. I wouldn't be surprised if there's a bullish rally, specifically to allow us the opportunity to resell price again. I would not be shocked that if they use tomorrow's data, if the current price, right, sits literally by that demand right now, which it is there right now, that it pumps up only just to resell tomorrow at the New York session when this core data comes out, right? So it's a give or take tomorrow. Just watch out for that. So jump on your Forex Factory, Forex Live, wherever you get your results from, and then match that with market structure, right? But as a dollar bear, I'll be pulling out my tools, like I said. I'll be looking for those Fibonacci levels. I'll be looking for, is this a retracement or is this a market reversal? And I'll be looking for my supplies and demand. So tomorrow's key player, I know you can't really see that from where I've set up the camera, but tomorrow's key player would be the supply levels on the H4 time frame. And if you go to your chart, I'll tell you right now where to look. I'm really interested in this area, of let me just pull out a horizontal rate. Just give me 1 second. Just take this time to like the video, man. If you like the video, if it helped you, take the time to like and subscribe if you haven't already. But I'm looking at the supply between 92, right, 745 and 92,516. So there, right, and it's quite high up. So I know I wouldn't get like a 61.8% fib retracement, but I do believe there are a lot of sellers there, and that's where I want to park, a fresh new entry into DXY. I did come out of this drop after they took out, or just before they took out the final H4 demand, because I wasn't sure if markets were going to reverse there. But it seems like markets have bled all the way down to that daily demand we spoke about in the war rooms. And now it's going to be interesting to see, the Asian market. Fundamentally tomorrow, like I said, I will be trading the New York session, 9 a.m. South African time. I've cleared my morning for that. And then we'll see if we can catch a few rallies up, right? But what happened in the last 3 weeks, last month, every time there's been a Fed event, every time Powell has come up, there's been a Powell pump, an anticipation. I'm talking about the stock market now. An anticipation that Powell's just gonna pump the markets, and as soon as it's done, a Powell dump, right? Like same like yesterday, a strong rally into the meeting, and just a stronger dump, right? And as a dollar bear, I'm here for it, right? So I'm hoping to catch some action up there. I will be trading what I see, obviously. But my bias is I'm still bearish, right? Just because of the daily demand, which is very significant, I can't forget about the bigger picture. I promise to keep this video short, so I'm going to end it off here. If you're interested in learning supply and demand in institutional trading, then stick around, because this next part of the video is for you. It's just a 2-minute rundown of what our course looks like, how our setups looks like, and the entire course is 50% off. Just to say thank you for watching the content on YouTube, for supporting us on YouTube, for finding us on YouTube. We are going to keep our course 50% off until we get to 3,000 subscribers, and I'm talking about our online course here. Until then, shake my hand and I'll see you on the other side. Beautiful, guys. How's it? Right. So this is what I was talking about when I said I'll just quickly give you a rundown of our online course. This is exactly, what people see and what people have received when it comes to our course. You can see a couple of people, well, not a couple, actually a lot of people have already been registered here. So this is where we host it for now. And essentially, you're going to get access to module 1, module 2, and module 3 when it goes live, right? So module 1 is what we call our mastering the basic phase. And inside here are all the fundamental things you need to understand about how banks trade. This is where you're going to be able to read bank movement, institutional movements, order flows, trading like the banks. It's all based on these first 4 weeks of the course, right? So if you open folder 1, you can see that all the videos are clearly labeled, right? Lecture 1, and I'm going to advise you, please, I beg you, please, follow the way I've kind of like curated this course for you. So don't just skip around. Don't look for specific topics, because everything that I teach is very much interconnected. And remember, we are rule-based traders. So it's absolutely important you get all the rules. Right now, in every single folder, this is week 1. You'll notice that there's going to be a PDF inside it. And the PDF, guys, is just a summary of what you've been reading or listening to, rather, in the video series. And the PDF serves, right, as a summary just to make sure you are up to date and you understand what the key things, the key learning objectives were for that particular week. I always advise people to watch or read, rather, the PDF after they've gone through all the videos. And generate questions from there. If you take our online course, don't forget, after the completion of module 1, before module 1, after module 1, and after module 2, we have to sit down with me for a one-on-one, so I can make sure before you start trading live that everything that I've taught you, you understand, right? It's actually very, very important to take these one-on-ones. They're already part of the deal. They're completely for free. So why not use me, to help with your journey? But essentially, this video is just designed to show you that the stuff is real. I know a lot of people have heard stories of people buying courses that don't exist. Well, all the videos are there. They're real videos. It's a whole curation. Most of our lecture series are about 1 hour, 30 minutes to 2 hours. All right. And it's just me explaining a whole lot of stuff to you over and over again, until you get it. So that's week 1. Right, we can just pop back in here and I can show you week 2. Week 2 will have the same stuff. And just please follow the way the way this lecture series has been labeled. You can see all of these are real videos. And then at the end of that week, again, the key learning objectives. And these PDFs are short. I mean, they're 10, 13, 15 pages, right? Leaders are readers. But if you want to understand market, you're going to have to do a lot of studying, right? They're short. They've got a lot of graphs in them, infographic. So it's not a lot of it's not too heavy reading stuff, but it's very important for your actual journey, right? So all the objectives are in there, module 2. And then I'm sure I've made my point already, but there you go, module 3, same stuff in module 3, and so in week 3, and then week 4, which is the last week of week 1. There's the PDF right there, etc., lecture series upon lecture series upon lecture series. And then after you're done with module 1, once again, let me know you've completed module 1, so maybe you can sit down for a one-on-one before coming to my Trader's Edge, right? Before moving to module 2, because we need to make sure that that stuff that we spoke about in module 1 is completely cleared, right? But essentially in module 2, same setup, video series plus the PDF. And then the other thing that you'll have access to is how I do my signal service completely for free for students in general. We don't charge for this, but this is me putting all those rules, all those series, all those supply and demands together. And then I show you what it looks like. So there's a new trading plan that is going to be uploaded on this folder this coming weekend, which are going to be the next few swing trade setups I will be taking. I tell you why I'm buying, where I'm buying, and I bring that whole theory into the praxis, and essentially everyone has access to this kind of stuff. All right, guys, 365, once again, thank you for watching our videos. Please don't forget to like, share, and subscribe. If you're interested in this course, just check the link down below. All right. Cheers. See you in the next video. Peace.